All right, let's talk about crypto. We spend so much time obsessing over charts, right? The headlines, the latest tech. But what if I told you the most chaotic, the most dangerous part of this market is actually what's going on right between your own two ears? Yeah, let's dive into that.
So, I've got a question for you, and I want you to really think about it. What do you believe is the single biggest risk to your crypto portfolio? I mean, what's the one thing that could really wreck you? Is it some massive market crash? Or maybe getting caught in a sophisticated scam? What about, some new government regulation? Well, believe it or not, it's none of those things. The answer is it's a lot closer to home. The number one risk in crypto, pretty much always, is your own mind. Yep, your own psychology, your emotions, those are the real enemy here. And here's why. The entire crypto space, it's like a psychological minefield. I mean, it feels like it's perfectly designed, almost engineered to set off our worst emotional triggers and push us into making just awful decisions. Just think about it for a second. You see these wild overnight price swings, the moonshots everyone talks about. When you're in one, your brain gets this massive hit of dopamine. It's literally like hitting the jackpot on a slot machine. And that creates this incredibly powerful and kind of addictive cycle of feeling amazing one minute and totally anxious the next. When you're on that roller coaster, trying to think rationally for the long term, forget about it. It's almost impossible. Okay, so if we're going to have any chance of winning this internal battle, we've got to know who we're fighting, right? We need to name our enemies. And these enemies are the psychological traps and biases that are, believe me, always working against us. And first up is the biggest one of all. You know it. FOMO, the fear of missing out. Aw, man, we've all been there, haven't we? It's that awful sinking feeling in your stomach when you're scrolling online and it seems like everyone is posting about their huge gains. You just get this overwhelming urge to jump on whatever coin is pumping right now before it's too late. And this quote just hits the nail on the head. This is the real danger of FOMO. It's probably the number one reason people end up buying at the absolute peak. See, you're not making a calculated, strategic move. You're just having a knee-jerk emotional reaction. You're buying out of fear, not because you've done your homework. Now, FOMO doesn't work alone. It's got two parents, and you know them well: fear and greed. And man, this tag team duo is just devastating for a portfolio. Here's how they get you. When the market crashes, fear grabs the wheel and makes you panic sell, locking in those losses for good. But then, as things start to recover, greed kicks in. It tells you to hold on way too long, to never take profits, because hey, it could go higher. So fear makes you sell low, and greed stops you from ever selling high. It is the perfect recipe for self-destruction. And that little storm of emotions leads us right into our next enemy. And this one is way more subtle, way more sneaky. It's called confirmation bias. This is that thing our brains do where we start building a little echo chamber for ourselves. You only follow the people on social media, only read the articles that tell you exactly what you want to hear, which is that your investment was a genius move. And the real danger here is that it totally blinds you to reality. You start to see any legitimate criticism, any warning sign, and you just wave it away as FUD, fear, uncertainty, and doubt. You lose all ability to look at your own portfolio with clear eyes, and it becomes pretty much impossible to say, you know what, I made a mistake, and cut your losses. All right, so we've identified the bad guys. We know what we're up against. The big question is, how do we fight back? This is where we pivot. We're done talking about the problem. Now we're going to talk about building our defenses. It's time to build a mental fortress to protect ourselves from these attacks. First things first, and this is absolutely critical. You have to know what game you're playing. Are you a trader or are you an investor? See, trading is a sprint. It's high energy, focused on those quick short-term price moves. It's a full-time job, really. Investing, or HADLing as we call it, that's a marathon. It's patient. It's focused on fundamental value over years. The problem is, most people try to do both and end up doing neither well. It's a recipe for disaster. You gotta pick a lane and stay in it. And this brings me to a really crucial point. As an investor, your greatest advantage isn't being faster than everyone else. It's not having some secret inside info. It's patience. That's it. The ability to just zoom out, ignore all the daily chaos and noise, that is a legitimate superpower in this market. Remember, you're not trying to beat some high-frequency trading algorithm. You're just trying to outlast the people who can't sit still. Okay, this right here might be the single most important tool in your entire arsenal. It's your investment thesis, your personal rule book, and you have to create it before you put a single penny into the market. Why? Because it forces you to be logical and rational before your emotions take over. So when the market is going crazy and everyone is panicking, you don't have to think, you don't have to feel, you just look at your rule book and follow the plan you made when you were calm and clear-headed. And speaking of simple rules, here's one of my favorites for managing risk. It's called the sleep test, and it is brilliantly simple. If you're lying in bed at night, staring at the ceiling, stressing out about your crypto portfolio, that's it. That's the signal. It's an undeniable sign that you're in too deep. Your position is too big for your own mental well-being. And the solution is just as simple. Sell a little bit. Reduce your position until you can actually sleep again. All right, let's start to wrap this all up. Winning this mental game, it's not about nailing one spectacular trade. It's not a one-and-done thing. It's about building the discipline and the right mindset to survive and hopefully thrive through multiple bull and bear markets. This is an ongoing process, not a finish line. So how do you stay on that path? Well, it's all about constant self-improvement. You have to embrace your mistakes. Every loss is just data, a lesson in what not to do next time. Seriously, keep a journal. Write down not just what you bought or sold, but why. What were you feeling? And this next one is huge. You have to detach your identity from your portfolio. Your net worth is not your self-worth. A bad day in the market doesn't make you a bad person. The goal is to build a system so that your plan, not your panic, is making the decisions. And really, that's what this all boils down to. The charts, the news, the tech, all of that stuff is just scenery. It's the backdrop. The real game, the arena where financial freedom is actually won or lost, it's all inside your own head. If you can master that, you've already won half the battle.